Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me once again David Gurwitz, and it's been a while since David's been on with us. David works with Charles Nanner Research Center, and he is really the person that we see most visibly in connection with Charles Nanner Research Center. Charles Nanner himself is the brains behind the operation, not that David doesn't have brains. He's a really brilliant guy himself, and I really enjoy talking to him. Welcome, David. It's really good to have you with me again.
Jay, it's always a pleasure, really. I look forward to spending the next 10 to 12 minutes going through all the different markets with you.
Always a pleasure talking with you as well. And it's always a pleasure getting the missives that I get from Charles Nanner Research. I get them on Monday, Wednesday, and Friday. I also get an overview of a lot of the markets that Charles is looking at on Sunday evening, and very excellent advice. The charts are succinct. You don't have to spend a lot of time thinking and reading about these things. Charles gives you the direction of markets in a nutshell, and that's what I really like, concise. If your time is really precious, Charles Nanner Research Center is really an ideal service. Not only is it ideal because it's succinct and you don't have to spend a lot of time, but because it's been very successful. And I have enjoyed using it and have used it profitably for my own purpose. So really glad to have you with us again, David. If you could just talk about some of the markets that Charles is following, just give us a summary, if you would, a brief summary, perhaps starting with the S&P and the Dow.
Okay, well, let's go through what we sent out today, Jay. And like you say, we send out a research report Monday, Wednesday, and Friday around 8 a.m. Eastern Standard Time. So anyone listening should go to our site, charlesnanner.com, and request a free month. And they'll get a chance to see how we do what we do. We cover stocks, bonds, commodities, and currencies. I'd like to spend the next few minutes going through what we did today and add to what we did yesterday, which are the charts, and that pretty much can give in 5 minutes a very big summary, or the detailed, of what we think's going on.
Excellent.
Okay, so let's start with today. What we cover every day is the S&P, NASDAQ, and Dow, and then the VIX and the TSX in Canada. Those are the three equities we cover, although in the first piece we also cover the DAX, the German index, and the Nikkei, which I'll talk about in a second. We also cover gold, which you are one of the masters in, and crude, nat gas, and silver. Today we covered copper. Then we do bonds and bunds, which are German bonds, and then five currencies: euro, the Aussie, the Canadian, and the yen, and then we cover the euro-yen cross. So that we do that Monday, Wednesday, Friday.
And those are all very important markets, ones that I care a lot about. So let's get on with it.
Okay, so when we said today, we saw the 10% predicted correction in the stock markets. As you know, we called the stop.
Mm-hmm.
Since then, the market's rebounded. However, overall technical model still weak, and based on cycles, we expect more downside. The sell signal continues, meaning we would ideally not want to be in. Doesn't mean go short, just mean we wouldn't be long, as long as the indices continue below the following levels. So we give 5 levels: S&P 1930 futures, NASDAQ 3885 futures, the Dow 16.6, which is cash, the DAX, which was the worst indice in the last week and a half, as we predicted, and the Nikkei 15,150.
Mm-hmm.
So that's our quick stock picture right now. Longer term, we think there's going to be a up move into the end of the year, and then next year is going to be like a V. It's going to be down a lot, up a lot, and then the next several years is going to be very ugly, as you know already.
Mm-hmm.
The second thing we cover is the VIX. Highly recommended that people trade the volatility index, because it seems to be, for us anyway, one of the leading things to indicate what's going to happen. We gave a VIX buy signal at 1250 last Wednesday. It hit over 30 and closed 8 points lower. Cycles are up, but it's overbought. But as long as there's no close below 1850, buy signal continues. People play the VIX through VTFs. There's a bunch of them. They can stay long stocks and hedge with the VIX. There's all sorts of ways to do things. Most people I talk to don't do it, and they should.
Well, let me just add to that, David, that I have played something, the VXX, which is a leveraged play, and have done very, very well with it, in no small part because of the information that comes out from Charles Nanner Research. I also follow some other people, but this was one of the keys that I look for. Should I be in the VIX today or not? And so
right. That's the
I
first
mentioned
thing, even though people don't do it. Then we cover the TSX, the Canadian Exchange. Why? Number one, we have a lot of Canadian clients, and you also, I assume, given the gold and silver world. Number two, the TSX, we call it from 12,000 to 14,000, got out, and we went back in, and we got up into the mid-14s, and then we got out again, and it's down to 13.9, which was our target, and it's too early to go back in again, but a close above 14.6 will cancel the sell signal. We think the VIX will be close to get back in again, and we've called that really well as well. Then let's go to gold, silver, crude, and nat gas, the big four commodities. Gold closed above 1240, so we want people to be long. Traders who put in long should have a tight stop, 1230. We're very cautious about that stuff. Weeklies are up, but a close above 1260 is needed to see gold higher. A very big number for gold. It's 1420. We haven't really written that, but I'm telling you that. But that's a number. If it gets past that, it really could start to take off. We want to wait and see when we get there. Silver never made it above 1750. That's needed for our buy signal. 3 years ago, when silver was around 50 and gold was around 1900, we said get out. And people had been riding gold and silver, as you know better than I, for over 10 years, was a hard thing to do.
Sure.
And so it's been down for 3 years, even with a bunch of bounces, which we've called. We're getting this. We called originally for the beginning of the bottoming process in July. There were a couple of bounces in gold, as you know. We did a 10% move in Newmont, and we got out. And so we're near a bottom. We don't think it's going to crash through any lower, but there's still. We haven't taken off yet, so it's been a harder thing to call. Longer term is bottom. We're just waiting for the shorter term. That's why we say go in with a tight stop. That's
so
the
let me just
picture.
So
and then longer term, we think it goes to 22,000 and then 2,500. Just like you would be very happy with that, but a lot of other people would.
Yeah. So do you have a time frame on that?
We're not sure.
Yeah.
We're not sure that those big numbers. It's a couple of years.
Yeah.
But,
okay.
That shows up, and it could go crazy higher. It shows as a lower percentage possibility, but it could. You have to remember, gold was you've been in the gold business 25 years. I don't know how long.
Yeah.
It originally was 300, 400, then it shot all the way to 19 over a decade.
Absolutely.
Then it got cut in half.
Yep.
And so these things happen, and we think longer term it's up, but. We kept everyone out, which is something we stress. Better to be out of something and not have the mental anguish of living in it than being in it and being depressed all the time.
Well, not only that, you preserve your capital too, David.
That's another thing. Crude bounced off to its 2-year lows, but it's on a sell signal. A few weeks ago, we sent out a crude chart, if you remember, showing a low buy in November. That's our projection. A close above 85 cancels the sell signal short term. So crude, we think, is going to have a bounce, and it goes into the first quarter up to February, March, and we're not sure levels yet, but it could be 110, 108. And we'll see from there. And we see also we have a target of 120, but let's take it one step at a time.
Sure.
Originally, crude we called from 13, 20, 25, all the way up to 147, and on TV, which people can see on our site, Charles called for deflation when crude was at 147. And it shot down 100 points over the next 6 months, 4 or 5 years ago. I don't remember. So, but who remembers anything anymore? So that's the crude story.
Yep.
Nat gas, again, is tough. We think longer term it's down to $2, which we called 4 or 5 years ago. If you remember, you always like to point out you trade on nat gas.
Yeah, I have done well with nat gas.
Yeah.
I haven't traded it recently, but I have done well with Charles.
It's been a good trade lately. So, but it's. When I say good trade, it hasn't been an easy trade. But that's the nat gas story. Copper is on a sell signal, and we think it's going to go to 290. Let's talk bonds. Okay, and bonds, while it's been on a 30-year rally since 1981, the rates were 16%. There was a spike, and they couldn't hold up. Cycles are close to its top in bond prices, longer term. But there's levels we give in order to cancel the buy signal. We need the following closes: the 30-year below 142.02, the 10-year below 126, and TLT, the ETF, below 120.35. Longer-term bond prices are down because rates are up, as they've been for 30 years been the opposite. And then I just spoke to a new client who, 88 years old, remembered 1952 rates were 2%.
Yeah. Back a full circle again, the cycles.
Circle. That's called a cycle. It's going to happen again. Pretty much big picture.
Yeah.
Bunds or German bonds canceled its buy signal, cycles top. Now the euro, which people always say what's going to happen with the dollar, we think the dollar is going to be topping next year. The euro closed above 127.70, so short-term cycle top is high. Right now is a short-term high. But if it doesn't close below a certain level, we can still go to 129.50. So it's range bound. You know, the Aussie's getting close to low, but we need a close above 88.50 for a buy. The Canadian is going near 115. Again, the details people can get when they read it, but basically, bigger picture, the dollar's been very strong, and we think that's going to end in most likely first quarter of next year. And so you have a big picture. Grains, we think will be a buy soon. Gold, silver, and stocks will be not so good, and bonds will be not so good. It's going to be a place you have to think about where you're going to hide.
Now, Charles, I know you look at each of these each of these markets separately, and you don't like to look at correlations. But I have to ask you, if just in terms of your timing, if you think the dollar is going to peak long about first quarter of next year, your timing on gold and some of these commodities, do they coincide? Like we see a bottoming in gold, we see a bottoming in the commodities, somewhat.
Yeah, somewhat, but we're not that smart.
Okay.
Because of
listen,
that, it's that.
Yeah.
You may disagree, but we don't think we're that
well,
smart.
you know what? You know what I would just say to my listeners? There's nobody smarter than Charles Nanner and David Gurwitz. And you know, one of the smartest things, I think one of the things that convinces me that you're smart is you don't think you are. So but I know that Charles Nanner, I mean, I met the guy once and he had smoke coming out of his ears. His brains were working overtime. This guy is brilliant. I make a joke about it, but Charles Nanner is a very brilliant guy. But you know, it's also something that I really appreciate about you, David, and I think Charles, I don't know him as well as I do you, but also the notion of humility along with recognizing you have talents, using those talents to help other people, and I think that's what Charles Nanner is all about. I want to thank you very much. Anything else you'd like to add before we conclude our discussion today?
Again, people should write to the site, Charles Nanner Research, say that they heard me speaking with you and get a free note for the research, and hopefully it will help them. It's not so easy these days, as people know, and they've had a good 6-year run-up in stocks. I'll never forget, we took everyone out in the summer of 2008. No one wanted to. It looked so good up to that point. So
sure.
It's very hard to see. Oh, I do want to add 2 other things.
Yeah.
War cycles, we called 3 years ago that were bottoming.
Mm-hmm.
Nobody thinks about this stuff. And there's also a infectious disease cycle.
Oh, my goodness. Okay.
Yeah, and the Ebola is an infectious disease. It happens to be called Ebola, but there's other things as well. And that also goes in patterns. We're studying that now, because Charles has mentioned that in the past, that also comes back. And, you know, God runs the world. That's the bottom line.
Well, I agree with you there, David, that our Creator is in charge ultimately. We like to think that we are. Right. And we try to rearrange the deck according to our own wishes, and sometimes in the longer term that simply doesn't work. But it's very interesting that Charles would be working on an infectious disease cycle, given the fact that he is and was practicing medicine in the past, right?
Yeah, although he sees this stuff, you know, like, you know, sunspots, for instance, nobody looks into. Years ago, he said 2013, 2014 would be a top in sunspots, and that would lead to depressed mental states, because sunspots seems to be correlated with the effect on water in the brain. I mean, I don't understand how it works, but there seems to be correlations. It's very hard for people to get a handle on that such that they would use it in investing, but nonetheless, these are things people have to consider. Why do things show up at cycle tops that make it a cycle top? We don't know what it is that causes the cycle.
Mm-hmm. Well,
when there's a cycle top, something usually shows up. And here, IBM, we said 2 weeks ago there's going to be more bad news. How do we know?
You didn't know that. I mean, you couldn't have known what it would be, but the cycles told you that. Yeah.
Right.
Well, it's very interesting, and I think again it's the notion that you don't know everything, the humility that comes into the picture, and I think that also comes into play because your acknowledgement that there is a creator,
Yes.
there is a force out there that's bigger than you and I, and you know, some people have higher IQs than others, and but everybody has a gift. Everybody is an individual, has a unique gift, and has been given certain talents, I believe, by God to use and try to help each other. And I think, really, in a way, I think that's what Charles Nanner research is all about. So again, I think it's a great offer to my listeners out there. You should really be taking David up on this. Request a free 1 month sample. It's really basically what I get 4 times a week, and just test it and see if it works for you. It has worked for me. So
Jay, he wrote it for a small place called Goldman Sachs, so
yeah.
he might have gotten it right. And we have a team of people that work on it also now, so it's not all the pressure on him.
Yeah. Well, that I appreciate that very much, and I want to thank you.
I appreciate the time.
Thanks.
Jay. I'm going to go on to my next call.
Thank you, David. Well, thanks again for joining us, and I look forward to doing it again sometime in the near future.
You too. Regards to the home front.
Thank you very much. Take care.
Okay, bye-bye.